Yeah, Wednesday. What's up, everybody? Wednesday morning, welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great early part of the week as we are rolling into hump day. Let's take a look at our four major markets, starting with the S&P 500 and then moving over to the NASDAQ. So our S&P today, a little bit of sideways price action, sitting below the all-time high. We talked about this yesterday in our Strategic Trader live trade room, and we didn't get any sort of a breakout, and we were really hard pressed to find great opportunities yesterday. And so today, yesterday was a good day to sit on your hands. Today, we're still looking at a potential breakout above this region here. If we do see a little bit of a retracement, look for a retracement back down to this 15-minute area of demand. Could we theoretically get a breakdown below here today? Absolutely, we could. So you could get a little bit of a short below here if you wanted to trade down. I would say if you take the short at 44.76, you're looking at your first target at about 44.67. Looking at the NASDAQ, similar picture. We've got that high that we've hit twice. So we've got that little bit of a potential breakout above here. Same picture exists here where you could get a breakdown below this region and then with price trading down into this area in here. Now, that level down there, 15,204, is this little wick over wick region in here formed at a pretty good time of the day. The origin of that move is way down here, but you may get a little bit of a, call it a speed bump stall. If you take this breakdown below here, do be aware that I've got this 15,275 to contend with. So you might actually have to take a little bit of money off the table pretty quickly on this one because of this, this area right there that could serve as a demand. Moving over to crude oil, so looking at our crude oil markets, we have started to rally up pretty well with crude oil. Pretty strong moves, a bit higher. Was hoping for a little bit of a pullback into the 64.28. We just never really got a clean pullback. So on the hourly time period, let's see if we get any basing in front of this level. I don't have the clear basing I need as of yet, but you could get basing there in front of that level. And then gold, we got our breakout above this region, which we had talked about the other day. Breakout came to another level, and then yesterday we hit it, and 6 candles later, 1, 2, 3, 4, 5, 6, the market was still basically at break even, telling you, hey, you should get out of this position. Remember that the 6 candle rule is there to help us, not hurt us. And then we came down to the demand level, which was a pretty good level. And then 1, 2, 3, 4, 5, 6 candles later told us to get out. So that's 2 trades in a row where the 6 candle rule kept you out of a losing position. Please, if you don't follow the 6 candle rule, it's not a bad idea to learn it. If it's, I would say that it's one of the most important risk management tools that we have in our toolbox. And so, this being as wicky as it is, I don't want to play a breakout around that area. There is a nice reversal level up here and a decent one down here. Okay, so there's 2 of them that are available for some small 2-to-1 trades. I'm not sure which one is going to be significantly better. Although our 4 hour is telling us that the demand level is a bit better, and then I would want to use this 1 hour more as a confirmation entry in here. So those are our 4 major markets, a whole lot of consolidation going on. Let's go take a look at a stock of the day. And our stock of the day that I want to take a look at is MasterCard. And when looking at MasterCard today, what I'm looking at is that we've got a daily trend that is down. We have just broken below some key lows, and we've rallied up with a reversal candlestick pattern yesterday. So if we get lower than yesterday's low, I think that MasterCard could set up for a leg down and a move down out of this region. It's slightly been underperforming over the last few weeks, and so if the market gives us a little sell-off, I think we may see MasterCard drop, and I wouldn't be surprised to see us drop down to this 343 area, looking at this little wick over wick as kind of a next stopping point. So I think you can get about $18 a share out of here, and your risk is really just the high of yesterday's candlestick up above this candle's high, and the high on that yesterday was 366.10. So you've got a pretty good reward to risk scenario set up on here. As far as your implied volatility, we're in the very low part of our implied volatility, so you can do a put. You can buy a put, and if that is too rich for your blood, then do the bear put spread based upon how low our current volatility happens to be. But that's our day. I hope everybody has a great trading day. If you have any questions, as always, send us an email. support@tradersarmy.com. I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.